According to the latest trade in foreign goods report from the National Bureau of Statistics, the value of total trade fell sharply by 27.3% in quarter 2 of 2020 compared to quarter 1 of 2020 and 27.46% compared to quarter 2 of 2019. In the report, the value of total imports dropped by 10.69% in quarter 2 2020 against the level recorded in Q1 2020, but increased by 0.39%. Year-on-year imported agricultural goods rose in value by 59.01% in Q2 2020 compared to Q1 2020 and 66.28% compared to the corresponding quarter in 2019. Raw materials reports increased by 85.69% in quarter 2 of 2020 compared to quarter 1 2020, 64.69% year-on-year. In a further breakdown, total exports was 45.64% lower in quarter 2 2020 than quarter 1 2020 and 51.73% lower than quarter 2 2019. Agricultural goods exports dropped 38.2% and raw materials goods export recorded a decrease of 56.2% in quarter 2 2020 compared to quarter 1 2020 and 52.4% compared with the same quarter in 2019. Now, joining us live from our Abuja studio is Uche Uwaleke. He's a professor of the capital market and is also the president of the Capital Markets Academics of Nigeria. Thank you very much, Prof, for your time.
My pleasure, Tolu.
Now, foreign portfolio investors have shied away from the local bourse in the last 8 months, thereby resulting in a depressed NSE ASI, that's All Share Index, which would gradually rebound off the global economy. Now, do you see a return of foreign money given the ongoing challenges with the exchange rate market?
Yes, let me even start on a positive note. The cheering news that you just mentioned, the fact that the central bank has resumed sale of forex to banks,
yes,
with a view to clearing the areas, the backlog of dollar demand. So for me, that's cheering news. Central bank is also resuming sale to BDCs, sale of forex to BDCs. What all that will do, of course, will be to reduce the pressure we are having in the forex market. So for me, that's a very good signal to the international investors, particularly with the central bank's plan to unify exchange rate. So this signal, the signaling effect will translate to increased capital inflows into the country. Now, regarding the participation of foreign investors in the Nigerian bourse, of course, for obvious reasons, we have seen a decline since January. As a matter of fact, if you look at the figures from January 2019 through December 2019, foreign investors dominated all through 2019. Apart from the months of May, June, and December, the foreign investors held sway. But we saw a different scenario, which we are still witnessing, in 2020, beginning January. From January up till date, as a matter of fact, the latest report of the Nigerian Stock Exchange with respect to domestic and FPI participation talks about domestic investors, leading transactions in the market. So it's been that way since January. And as I said, it's for obvious reasons. The COVID-19 impact and the fact too that the oil price went down, they all combined to drive away foreign investors. Foreign investors in the Nigerian stock market in particular, of course, as you know, have been described as fair weather friends. So they're only here when the going is good. When the going is not good, usually signaled by a drop in oil price, they leave. So that also corroborates with the report of the National Bureau of Statistics, the recent capital importation reports for Q2 2020 that the NBS released. It corroborates what the report by the Nigerian Stock Exchange. The fact that capital importation dropped to as low as $1.3 billion in Q2 of 2020, similar to what we saw in 2016 when the economy was in a recession. In 2016, Q2 of 2016, capital importation also fell to $1.04 billion. It was $2.5 billion in 2015, Q1 of 2015. So what appears to be the trend, if you look at it, you try to make meaning out of the trend, is that the capital importation into the country appears to oscillate, appears to fluctuate with the oil price performance. Anytime you see oil price going up, capital importation is up. And when oil price goes down, capital importation also goes down. So we saw that in 2016, and we're also seeing that now. So one can attribute that first to the fact that oil price declined in Q2 of 2020. Remember, at one point, I think it was in April, where oil price fell even below $20 per barrel. So that has been the situation, compounded by the COVID-19 pandemic.
Prof.
Of course, you know that over the years, Tolu, the major source of our capital imports has been the UK, followed by the US. And these are also countries facing a recession of some sort. The UK has announced a recession of over 20% economic contraction in Q2 of 2020, and in the US over 30%, as a matter of 32% for Q2 of 2020. So if these countries are experiencing a contraction, it is also expected that the inflows from them will also drop. So that is what we have seen so far.
Prof, let me now ask, you've identified some challenges, COVID-19, dropping oil price. We still have high domestic inflation at 12.8% as of July, falling GDP to minus 6.1% in quarter 2 2020. We have rising unemployment, which stands at 27.1%. Now, all of this seems not to inspire confidence in 2020's economic outlook for Nigeria. Now, are there any bright spots at all talking about suggesting return of foreign capital into Africa's most populous nation?
Yes, Tolu, the figures you mentioned, you just read out, are all with respect to the Q2 of 2020. The drop in GDP contracting by 6.1%, the unemployment figure of 27.1 for Q2 2020 as well, underemployment of over 28% for Q2 of 2020. All these figures, again, relate to this particular period. And for me, this particular period represents the worst-case scenario, for Nigeria. And going forward, I want to believe that given what is happening now, given the central bank's injection of liquidity in the forex market, trying to stabilize it, and also given the improvement in manufacturing data that we're having, even across the world. In Nigeria, as you know, Purchasing Managers Index improved from the previous month to about 48 points, even though it's still below the 50 points indicative threshold, but is improving. So if we look at the gradual reopening of the economy, if we look at the fact that the forex market in particular, is about to be stabilized, I think the Q3 and Q4 will witness the better performance. Now, talking about the way forward, I want to say two things very quickly. The first is that beyond what you hear from any college student, any college student will tell you that for you to attract investment into this country, you need to fix infrastructure. Of course, that is true, and you also need to fix security. Insecurity is a problem. It deters foreign investors from coming in. Infrastructure is also key. Now, beyond having the enabling environment, beyond working on your ease of doing business, let me say something very quickly. Our foreign embassies should also be involved in attracting foreign investors into this country. I was talking to one of Nigeria's prominent ambassadors the day these numbers came out, and I told him I have been looking at the numbers, and yes, COVID-19 explains it, in part. Drop in oil price explains the part, but that doesn't tell the whole story. if you look at the numbers, even before COVID, before the oil price decline, the numbers we have for Nigeria pale into insignificance when you compare us with countries like India, Malaysia, Indonesia, including even in Africa, South Africa. So what we are getting by way of capital importation is not commensurate to the size of the economy. It's disproportionate, to the size of, to the resources that we have. And it's also not in line with the population. This is the biggest economy in Africa, the biggest population. We should command more in terms of, capital importation. So how do we do this? I was asking him, and he said that the thing is that there should be a policy, a deliberate policy by the government to also involve embassies to be part of this, capital, attracting capital, to Nigeria. And part of what they should do is to, provide adequate funding. He told me that beyond money for utilities, beyond money for payment of salaries, that they hardly have enough money to engage the business community. And as you know, in some of these embassies, they are located in administrative capital. The commercial capital of their countries, is elsewhere. And for them to engage, to do things like road shows, they will need money to do that. And I am thinking, I know funding will be a constraint. In view of scarce resources, what the government can do is to identify countries that are very active in foreign direct investments in particular. I repeat, foreign direct investments in particular, as opposed to foreign portfolio investments. Because over the years, we've had capital inflows from Britain, from US, but mainly foreign portfolio investments. If you look at the trend of capital inflows into this country, there have been more of foreign portfolio investments. As a matter of fact, this is the first time we are having other investments, taking the upper hand, and other investments coming by way of just loans, many loans and other claims. Okay, so we need to emphasize foreign direct investments, and because that is what will grow the economy, that is what will help to also reduce the unemployment rate. So what should we do? I want to submit that we should look at countries that are active in foreign direct investments. If I was looking at the United Nations Conference on Trade and UNCTAD and Development data, if you look at that UNCTAD data says identify Singapore, Netherlands, Japan, China, and even Mauritius as countries that are active in foreign direct investment. So it is for us to woo these countries now to Nigeria. If you look at what they did, Singapore, for example, and Singapore and Netherlands contributed about $131 and the other one $141 billion to the million dollars, for second quarter of 2020. If you compare that to what they have done in other countries, again, that pales into insignificance in spite of COVID-19. So we should woo them to invest in Nigeria. And part of how we can do that is to also identify our embassies in these countries and empower them to be part of this inflows that have been attracted to Nigeria.
Allow me, Botti, now,
look
Prof.
at the sectors that are attracting this dividend.
Yes, allow me, Botti, now, Prof. Point really well noted, talking about the involvement of the Ministry of Foreign Affairs. Yes, indeed, they should play a key role in making this happen. But very quickly, let's look at now the efforts by the fiscal authorities. We see them raising variety of domestic fees, levies, and taxes. Now, but people are also arguing on the other side. They are maintaining this position. That is this right, particularly at this time where we're gradually drifting into recession, technically in recession. What other options would you say are available at this time of what we call stagflation and its effect on the local capital market?
Yes, I agree. The government needs money, of course. That's why the value-added tax was increased from 5% to 7.5%. A whole number of reforms are coming up at this time, including recently, of course, as you know, the pump price of fuel was increased to 151.5 kobo per liter. There is also talks about increasing electricity tariffs. So I think all these reforms coming at the same time some of them should be faced, given the period that we are in. Because if you take all of them together and you're heaping them, foisting them on the economy, forcing them on economic agents, all at the same time, of course you are going to have a problem of reducing the welfare of the people. You're going to have a true high rate of inflation. There's no way that we are not going to have inflation with increase in the pump price of fuel, with increase in electricity tariff, with increase in VAT, with border closure, all of them at the same time. So I think the government should think of phasing. If it means deferring the electricity tariff to sometime next year, I think that to me will make a lot of sense, so that the entire burden is not borne by the people at this time. Now, what's the way out, the solution? I also think that the government, in my view, is already highly levered, is already highly geared in terms of loans. We borrowed so much. So I am not going to recommend further borrowing. The little we have already borrowed, we should utilize them very well. But I also think that the government can also raise funds through the sale of assets. This is the time whenever the economy is in a recession, whenever even at the level of individuals, at the micro level, whether individuals or firms, if you are cash strapped, you're having a problem, you can afford to identify assets that you can dispose. So this is the time for government to privatize some of its assets. I want to repeat this. I said it some time ago. That part of why the Iranian Stock Exchange, the Iranian stock market is booming today, is because government of Iran, in spite of U.S. sanctions, in spite of COVID-19, in spite of decline in oil price, government of Iran is privatizing some of its assets, and because of that, is stimulating activities in the stock market. So we can do same here. We can privatize some of our assets through the Nigerian Stock Exchange. That way, the government will raise money quickly, and at the same time ensure that those enterprise or those assets are efficiently managed.
Prof, in 60 seconds, we're already running out of time. Reports from the banking sector, a little bit of declining profits and all of that. Would this further worsen foreign investors' expectations? Do you see any reversal, say Q4 2020, Q1 2021? In 60 seconds, what are your expectations?
Yes, I think the banking sector is not, as you know, is not as hard hit as other sectors of the economy by COVID-19. Whether you're looking at even the capital importation reports that we just saw, the capital importation reports, of course, capital is imported through the banks. The banking sector represented the second highest sector, apart from the ones that came through shares. If you also look at the MBS Q2 GDP report, it also said the financial and insurance sector performed very well relative to other sectors. As a matter of, insurance, yes, declined in negative territory, but banking, which dominates the financial institutions, recorded over 28% real growth in GDP. So I think our financial sector is still strong, is still resilient. But I would like to see them grow beyond where they are now to compete with some of these foreign banks, Standard Chartered, Stanbic IBTC, and Citibank, that every year in, year out, quarter after quarter, account for the bulk of capital that is imported into this country. So I think for the financial sector, the outlook is still bright.
Professor Uche Uwaleke, thank you very much. He's the professor of capital markets and also the president, Capital Markets Academics of Nigeria. Thank you very much for your time.